Hello everyone and welcome to the channel. My name is Brent and in today's video we are going to be doing an M1 Finance 1 month recap for April 2021. We're going to go ahead and quickly take a look at the portfolio, go over the current overall performance, take a look at the 1 month performance of the portfolio. We're also going to go ahead and cover some of the activity as far as what did we purchase or sell within the month of April, and what dividends were paid out. It's been a bit since I've made these style of videos, and I really want to continue to track the M1 Finance portfolio, the progression that we've had over this 3-year period from starting off with nothing and adding our first bit of capital every single week to where we are at now. That way it kind of showcases the performance that anybody can have just by getting started putting for $2,500, $200 into the market on a week by week or month by month basis. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Stock market overall futures are looking positive going into Monday. We can see here S&P 500 are positive by 0.46, 0.27 on the NASDAQ, and 0.53 on the Dow Jones. So going into Monday, it's looking pretty positive, as last week, we had the market simmer along, and we actually had the S&P 500 only up 0.02, whereas the Dow Jones and the NASDAQ were negative by 0.5 for the Dow Jones and 0.39 on the NASDAQ. Okay, Roth IRA overall performance, we're up a little over $9,200. This return is money weighted return, so based on how much money we've invested and the return that it has had with our capital, that's where it overall tracks there. Now, our best performers have been Apple, up a nice 241% return. We don't actually have much base money invested in Apple. We have $469. We did sell a bit of it in this portfolio, but I had picked up a bit of it in another portfolio at the time. I don't own quite a bit of Apple anymore, so it's just one of those positions that you should have bought Apple and never sold it. Basically went from a $1 trillion company competing with Amazon to overtaking Amazon to becoming a $2.3 billion market cap company. So it is still rocketing to the sky. Right behind it, we have Main Street Capital, ABM Industries, and Lowe's. So those are our top 4 performers. Our worst performing companies at the moment. This is incorrect. M1 Finance is showcasing that this is down 81.52%, but I just purchased this one, so this is really showing incorrect. This is kind of weird data. It's only down $36, so I just purchased Clorox on, I think, Thursday or Friday, but we'll take a look at that here as we get into the activity. Right behind it, we have Simon Property Group, down 21.79%. I'm pretty happy with the recovery of this one. This one was down at a point, down 60 to 70%, I believe. So that was another one along with SKT, which I sold out of here recently. So I'm continuing to hold this one, and we'll hold it until it recovers, and then more than likely I'll just kind of let this one go as I move into other REITs that I feel will have less risk and more upside potential with better fundamentals behind it. IIPR, this is a real estate investment trust that I recently moved in within the MJ area. They have properties that they leased out to businesses that perform these functions, and they collect some of that. It's been actually doing really well. And as far as their performance for their revenue, net income, free cash flow, their earnings per share, it's been blasting off the charts over the past 3-5 years of growth. I think it went public in 2017, 2018. So, not very long, 3 or so years, but I feel like this is still a very small market cap versus where I believe it'll go to in the future as federal legalization becomes something a bit, more out there. It's more future look potential, 5-10 year outlook. And I know there was just some article that was floated out that I shared over on Facebook is right here. So interesting here. House approves banking bill. This will basically allow banks to do business with MJ companies without violating any federal law. So this bill would remove one of the barriers to develop, this industry. So I believe that this is a really good move, here in the short term and also in the next 5-10 years. So this is just one I started buying into a little bit, and I'll probably continue to buy into in the future, especially if it dips down 5-10%. I just buy more of it as a long-term buy and hold. Altria and these other ones are starting to kind of pick back up into the green. Altria is one that I do plan on selling in the future, but I'm just kind of waiting a little bit further as it's basically flat, with market gains, so those earn dividends. So I do believe that Altria does have a bit more upside potential here in the short term. I'll go ahead and wait for that, and then once it recovers its market loss, I will go ahead and sell it out of the portfolio and move on to something a little bit with more growth, less risk, especially with Fed. I think it was the Fed coming in there trying to regulate how much nicotine they can put in their product. Well, I think it's a good area for future MJ potential and, that side of the business. It's a very large business overall to kind of move and get performance from, even though it's a cash cow. So those are some of our best and worst performers. So if I go slowly through the portfolio, you can kind of see some of our other holdings here within the portfolio. And if you guys are interested in checking out my overall portfolio, it'll be linked down in the comment section below. There'll be a link there to my portfolio where you guys can see all the holdings within the portfolio overall. Okay, let's go ahead and take a look at the activity for this portfolio. Let's go ahead and change it for the month of April 2021 to 30/2021. So let's just take a look at this month here, and we'll just take a look at the deposits, because I don't think, we didn't make any deposits for this month. So not a whole lot there as far as adding new capital to this portfolio in the month. Actually, in the year of 2021, we've only added $360, but this will be changing here very shortly as we begin to ramp up our deposits again here in 2021, just to continue maxing out the Roth IRAs. I'll be maxing out my own Roth IRA, and this is my wife's Roth IRA, which we will also be maxing out as well. Go ahead and take a look at the dividends now. Let's take a look at trading. So we did buy some positions this month. So earlier in the month, back on 6th of April, we started purchasing a bit more of Selective Insurance. This is a small insurance group. I think this one is around $3 billion market cap, somewhere around there. Innovative Industrial Properties, kind of discussed that one a bit. Main Street Capital, this is one of those BDCs that I'm really interested in. I had actually, looked into a little bit further way back when they had a 6% starting yield and where they're at fundamentally, and they looked awesome. Even though, they've had excellent performance over the past year or two, I just feel that they have still much more upside potential. Here on April 16th, I performed 3 sells. So Chevron got to a point where it had been negative, but I went ahead and sold out of it. Was pretty happy with just kind of closing that position and moving capital into other positions. Caterpillar, this is one, again, I sold out of this one at $234.57. So I don't know where it is at the moment. So if I go and type in cat stock over here on my other browser and bring this over, it is at 228. Oops, so I sold it at 234. So it's came down slightly. I think it was at one of those high points where it's had really good performance, but you can see here as of March, it's been trending sideways. It may break higher, but it could also just pull back because it's been losing revenue, earnings per share, I believe, and it has a very high PE ratio of 36.47 on that sheet right there. So I think it has more downside potential versus upside. I just went ahead and took profits there, and within the Roth IRA, everything that I take profits on is 100% tax free. I don't have to worry about paying taxes on it, so I just take profits, move those profits elsewhere where I believe that there's less risk and more upside potential. So completely removed those stocks from my pie, and that kind of sold off the rest there. On April 20th, I bought a little bit more innovative industrial properties because I had dipped into the 5% down. So I just bought $100 more. And on April 26th, so after I'd sold out of Chevron, I sold out of Caterpillar, and I sold out of Consolidated Edison, I went ahead and bought just a little bit more of IIPR, and this is where I purchased that $2,000 of Clorox. So I felt that Clorox was in a really good position here. Take a look here at Clorox and where they're at as far as price at $182.50. This is their lowest point over the past 52 weeks. We are trending at 52 lows at 182.50 with a starting yield of 2.43%. Like Clorox is at a good position right now where I can buy it, has good fundamentals, good customer need and want for it. So, it's just one of those long-term plays there for Clorox. And let's go ahead and check out dividends now. So let's only take a look at dividends. Let's go ahead and start here at the beginning. Okay, we're going to take 4 now. So let's go ahead and add these up. 386 plus 754 plus 356 plus 669 plus 865. Let me know down in the comment section below, where do you think we will land here? I haven't actually tallied up my dividends in quite a while. I've really just let my portfolio just kind of sit along and really haven't been watching them a whole lot. But I'm pretty excited to see the growth in these dividend stocks and in the dividends. Just a few years ago, we started this portfolio, we were not getting a whole lot in dividends. I think we were getting around $25. So we stopped here at 1721. Go ahead and add plus $5.98 and $2.22. So our total for this portfolio is sitting at $109.14. So that is really good overall for the month of April. We made a little over $100 there, and our 1 month performance here. So if we take a look at the portfolio and we take a look at the 1 month performance, we are up roughly 3.35% there overall. So overall, our performance is pretty nice, up 3.35%, whereas the rest of the market was down 0.02, 0.5, and down 0.39. The M1 Finance portfolio put on roughly $1,000 of capital gains, $977 of capital gains, and made around $87 of dividends. So I'm really happy with the performance of this portfolio. We're going to continue to adjust different pieces that either underperform the market, are areas that are having regulations kind of moved against them. These ones right here, they recently got knocked down and beat down to oblivion. But overall, I think long-term wise, there's still demand for Kimberly-Clark products and Clorox products, especially right now as the market is trading at these all-time highs. I'm looking for what I feel is value and will have a need regardless of where the market goes. And if we fall 10, 15, 20%, I know that long-term Clorox and Kimberly-Clark will be around because they're one of those, they have staple products that are in everyone's home. So we have some cash sitting in there, $33.87. I'm going to go ahead and put that towards, where is it? I think it's Clorox. That's that one that was bugging out. So I think if I put some cash into it, I think that should help that, not bug out as much. So we have $33.87. Continue and confirm there. And that's going to be my buy order from Monday. This portfolio is now generating over $100 of dividends within the portfolio. That's an extra $1,200 a month. If we make $100 every month over 12 months, that's over $1,200 of dividends getting paid out. That's being reinvested. That is 1/6 of our total allotment that we can invest in our Roth IRAs yearly, already getting paid back to us, that is able to be reinvested. So essentially, we're able to invest $7,200 of cash into a Roth IRA every single year right now. But going forward, watch that double in the next couple of years. We'll have what, $8,000 and $10,000 and $12,000, and soon we'll have $6,000 of dividends getting reinvested back into the portfolio, generating tax-free, growth and dividends in the future. So that's pretty exciting. Anyways, that is going to be it for this video. Let me know down in the comment section below if you're planning on buying anything this week, if you're selling anything, if you're looking forward to any earnings. I recently just shared some companies that are going earnings this week. So if you guys are looking forward to any of these, let me know down in the comment section below. The only thing that I had seen is Pfizer that I'm going to be checking out here. Activision Blizzard's one of those companies where I really enjoy their games, but just not the company itself. So we'll probably still check them out anyways. But that is going to be it for this video. Again, if you are brand new to the channel, have not yet subscribed, go down below, hit the subscribe button to make it gray. Hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. And thank you all for tuning in. I really appreciate it. And I will see you guys in the next video. Bye-bye.